Hello and welcome to the day ahead. It's Wednesday, the 7th of December. I'm Andrew Gagan. Well, global equities have booked a third straight day of losses. Stocks on Wall Street fell again as investors fret about the prospect of interest rates staying higher for longer, while also contemplating a looming recession. Meta was the biggest drag on the S&P 500. It was sold off heavily on reports of a ruling from EU regulators that it should not require users on its platforms to agree to personalised ads based on their digital activity. Energy and communication services, along with the tech sector, were the biggest laggards. And Mirati Therapeutics slumped to its largest daily drop since March 2020 after the company reported disappointing early trial data on its experimental cancer drug. While shares in Textron jumped on news that it had secured a contract with the US Army for its next generation of helicopters to be made by the company's Bell unit. Adding to the broader negative sentiment were comments from corporate leaders. Bank of America chief executive is predicting 3/4 of mild negative growth next year, while JP Morgan Chase chief executive Jamie Dimon has said inflation will erode consumer spending power and that a mild to more pronounced US recession is likely. And the S&P Banks Index fell, with Bank of America shares leading those declines. Well, slowing global demand and a strong US dollar has seen the US trade deficit widen sharply in October. The deficit increased 5.4% to $78 billion as the export of goods fell 0.7% to $256 billion, a 7-month low, prompting suggestions that trade could be a drag on economic growth this quarter. The widening trade gap was partly driven by a sharp fall in pharmaceutical exports, primarily COVID vaccines, while imports surged. And the US dollar has appreciated by as much as 11% against currencies of America's main trading partners this year, making US manufactured goods less competitive on global markets. Additionally, rising interest rates are eroding demand. Well, the US dollar was little changed against most major currencies after strong gains from the previous day as investors take positions ahead of next week's expected interest rate hike from the Fed. And the Aussie dollar was down after having risen as the Reserve Bank raised rates for an 8th time in as many months, currently sitting at 67.3. And with little economic data, US Treasury yields have slipped slightly. Meanwhile, the European Central Bank will have to raise interest rates several more times to tame price pressures, says Chief Economist Philip Lane, saying we do expect that more rate increases will be necessary, but a lot has been done already. I would be reasonably confident in saying that it's likely we are close to peak inflation. And the ECB has raised rates 200 basis points since July and has signalled a slowdown in its pace of monetary tightening this month, with a 50 basis point hike expected. Well, to the Australian share market, it is set to drop at the opening, with ASX futures currently down just over 0.5%. The energy sector will be in focus today, with the oil price tumbling below $80 a barrel for the first time since January, as concerns grow about global demand, despite the positive effect on prices from a price cap on Russian oil sales. Iron ore futures, they were up slightly. Base metal prices were broadly higher, and the gold price has firmed as the US dollar gave up some of its recent gains and those US Treasury yields retreated. And the crypto market remains in a relatively tight trading range, with Bitcoin just below 17,000 US dollars. And today on the data front, GDP data for September out, and that is your day ahead. We'll see you again tomorrow.